do we know if the bottom is near? Have we bottomed now?
No, generally a bottom, and I've seen this movie so many times before, is you need a big institution to go bankrupt. We're getting close to a bottom here. But what I'm doing right now is I'm waiting. I'm waiting for the big event, as I call it. That day will be an interesting day. It'll be a day of panic.
How do we know if the bottom is near? Have we bottomed now?
No, generally a bottom, and I've seen this movie so many times before, is you need a big institution to go bankrupt. That always helps. I mean, you have to sacrifice an institution to get this to work, because then you get a dramatic flushing of equity positions as panic sets in, margin calls are called in, shorts, that basically bought themselves in already, and then you get this big leg down. Usually it's 5 to 10%. And that is the bottoming process we need. Now, this time I was thinking it might be in the crypto space, right, but that's already been decimated. And so it may be something else, a financial services company, or, there was some rumors about Coinbase that turned out not to be true. But you need somebody's offside somewhere on a leveraged hedge position. You just don't know who it is yet. And they're big. And we're going to wake up in the next 10 days, 20 days, and you're going to find out they're a zero. That's a good thing. And I'm waiting for that to happen, because we're getting close to a bottom here. It usually happens in financial services where somebody was trying some strategy, a leverage strategy. It's always leverage that does this, or a hedge fund. Hedge funds, a good hedge fund that loses 10 or 20 billion, that's also good for flushing. And that's happened many times before. These are guys that have never seen this kind of a market. So they set up a position that went awry, couldn't unwind their leverage, and they just get wiped out. And again, I feel sorry for them, but I think it's very healthy when that happens. And the trouble with this correction is it's a slow grind down 1 to 3% a day. And you don't really bottom till you get that flush. And so it's not a big surprise that you would have inflation now. That's what happens when you run the printing presses. It's unprecedented to print that much money ever in the history of our economy. And so having some inflation. Now, the big question now is what portion of it is transitory? Let's take a hint from what happened with Target and Walmart. Half of their problems were supply chain issues, the wrong mix of product, and increased costs of transportation. So it wasn't that the consumer rolled over and didn't want to buy anything. That wasn't the issue. The issue was they really had increased costs. In the case of Target, an extra $1 billion+ in just transportation. And so that really is something that's transitory. That's not going to be around forever. And so you have to kind of put that into the cake when you're talking about 6 to 8% inflation. Maybe 4 to 5% of that is real, and the rest of it is short term. And the market's kind of waiting to see which quarter we start to see that wane a bit, maybe come down to 7-6%. Every day when I see a correction like this, when I see Walmart down 20%, for example, which is a bellwether stock, if I'm an opportunist, I might put on a position. But what I'm doing right now is I'm waiting. I'm waiting for the big event, as I call it. And you get these events, and we talked about it. That day will be an interesting day to put 130 positions on. It'll be a day of panic. We'll be down somewhere between 2,000 and 3,000 points. And yeah, it's horrible to talk about it, but that actually is very healthy. Very, very healthy. You get the PE of the market down into the 15 range, even lower. That's a tremendous buying opportunity. And I actually think earnings are going to be pretty good into the first and second quarter next year, because we're still at full employment. And so, all of these concerns and the Armageddon scenarios, and these are putting pressure and compressing PEs, but I haven't seen the downturn of the consumer yet. I remain bullish on crypto from the perspective of productivity. And so I think if you're buying projects, and I've always said this, Bitcoin is not a coin, it's software. Ethereum software, Solana software, Helium software, Pollen is software. All of these different projects around different sectors of the economy. Solana may be better ultimately for transactional speed, because Ethereum is pretty slow. So we don't know which one of these projects is going to win. But the whole premise is that you want these for financial services. And I still believe that in 10 years, crypto will be the 12th sector of the economy, but all the existing tokens will not exist. There'll be many that just go to zero because they were highly speculative, they were fun, they had no real intrinsic financial services value. But if you were to ask me about USDC and say, look, where's the value of that? Well, first of all, you can stake it or loan it at a 4% rolling annualized yield every 30 days, and that's valuable in inflationary times. Secondly, it is a highly effective payment system because I am now accepting payment for goods and services in USDC, and very often not converting it back to fiat because I'm simply leaving it in my Circle account and rolling it into these 30-day contracts. In fact, I had a really interesting dialogue with one of my banks last week, and I plan on reading the script at the next crypto conference because it's quite interesting. It really says a lot about the banking system right now. I cannot buy more than a 3% weighting in any mandate of USDC because my regulator, or my compliance department, I should say, treats it as a highly volatile equity, as evidenced by what happened to Luna, what happened to UST. So they're looking at that, not differentiating the difference between those two tokens. So they're saying, look, you can put on a 3% weighting. So in the case of that particular mandate, that was $7 million. So we moved the $7 million out of the account into a USDC account. And within hours, I got a phone call from the bank saying, what happened to that $7 million? Why didn't we get a chance to bid on it? I said, okay, bid on it. Right now, I'm staking it out at 4% for 30 days. Right. They came back, gave me double B corporate credits for 3 years at 3%. And I said, why would I ever do that? You're not competitive. You've got to meet me at 30 days for 4%. And then they sent me all the articles about the correction of Luna. And I said, Luna is not USDC. These banks are now finding themselves getting squeezed because people are figuring out they're not advancing enough into understanding how crypto works. And their clients, I'm just one client, are moving millions of dollars out of their account elsewhere. And I said to him, look, you can bid for this money anytime you want, but you have nothing of value to me if I have to pay 100 basis points less and tie up my money for 3 years and a double B corporate credit. You're not even competitive. You're not even near what I can get. So there you have it.
You know, there's talk that with some technical analysts calling that, hey, even more pains in store for Bitcoin, that it could possibly head down to 12,000. What do you make when you hear these numbers thrown around? Do you think that this crypto winter will be a long one, or any sentiment as to where the market will head now?
The forecasts of Bitcoin have never been accurate. No one's been able to forecast its volatility. And, you know, the speculation that it was going to be a hedge against inflation was just flat out wrong. And that didn't work. And maybe it will work one day, but I'd argue that the volatility on Bitcoin is going to remain very akin to what Amazon was for its first 15 years, 30 to 50% corrections every 12 months, because there was no institutional support in the early days of Amazon. It was a retail product as people started to use the service, bought the stock. That's the same right now for Bitcoin. There is no, people talk about institutions owning it. That's just not true. They don't own any of it, and they won't until the SEC rules on it. There is some institutional ownership in the Canadian market by Canadian institutions because they can use the ETF and equity mandates, but that's Canada. They were the first to allow an ETF with Bitcoin as the underlying. They also allowed an Ethereum ETF. And so those are positioned, but they're inside of equity mandates. The actual ownership of Bitcoin itself remains elusive to the institution because of their own compliance departments. And on top of that, no infrastructure for compliance. There's no way to market into any of these systems the price of Bitcoin or whether it's levered or not during the day, the way you can with stocks that have been treated that way for decades. So there's so much work to be done.